Okay. I think I'm live. I'm not sure. I gotta double check this. Hold up. Let's double check this. Let's double check. Let's double check this. Let's double check. Do 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 do. And yes, we are live. Hold up. Let's double check. Okay, hold up. And dismiss. Quality looks pretty good. I think we are chilling so far. Got it. Yep, quality is pretty good. Let's hear the audio. And yes, we are. Yep. Okay, cool. And we're live. Okay, so what am I doing today? I think I'm investing researching. All right. I did have a company in mind that I was gonna research today. I think it's BBWI. BBWI. Bath and Body Works, not Bed Bath and Beyond. That's the bad one. That's the one that's almost like bankrupt, but somehow they gained like $1 billion in funding and they survived. So I guess we're doing Bath and Body Works. Okay, this is one company that I have been wanting to look at for a while. They're lowest at 25, and they're in the middle basically. Yeah, they're in the middle, like right in the middle. Damn, that's a crazy stock. So they were 7.9 in the bottom of COVID, and then we hit a maximum of 76 during 2021, and then we are going for All right. So then we hit a maximum of about 76 during I'll play some music on my earbuds and no one else can hear it so I don't get copyrighted or something. But BBWI is like right in the middle right now. Let's see. I mean, it's trading at 11 PE. So let's do BBWI 10K. All right. Holy shit. Okay, so this came out like last week. Cool. No, wait, that's the amendment. Annual filings. Ooh, okay. No, wait. They're gonna release their earnings next month. Okay, so this is almost a year old, but it'll help us get an idea of the business. Let's do quarterly to get the most recent earnings. So this is going to be Q1 of 2022. Yeah, so first quarter, second quarter, and then third quarter. So that's the current updated data. And then this is the last year's annual report. So I'm going to download all this for me, make it easier for me to like have this data whenever I need it. BBWI, Bath and Body Works. BBWI fiscal year 21 annual. Yeah, so this is, yeah. Fiscal year 22 Q1. 10Q. Q2, 10Q. Hold up, I'm gonna check some Discord for a second. Hold up. Hold up. Hold up, what the hell's happening? That's all three of them, right? Yeah. Good idea. I can never know. All right. How much did I get? Oh, shoot. Actually, just what the hell just happened? History, recent. What the hell? All right, there we go. Maserati down the dead end street. Okay, so let's get back to the point. Um, Wait, what stuff do I even have downloaded so far? Wait, company reports, BWI. Okay, I need Q3, the most recent one. I think it's at third, right? Yeah, it's a quarterly period. Okay, I'm still kind of like rough on this stuff because like I'm still learning how to, Oh, hello. Hey guys. What's up? Only Ghosty or Throsaha. What's up, y'all? Just I'm kind of rusty, so I'm still getting uh, you know, I'm not the most efficient in downloading this stuff and using Excel, but it's something. 3. Okay, so got that stuff. So now just weed through this. Serve business. Okay. If y'all are interested in learning, I mean, you guys can always ask questions. Let's turn into like the Buffett and drink some Coke. It's a joke to Warren Buffett because he owns Coca-Cola and only drinks I think he drinks like 5 Cokes a day. Okay. So the thing was, the weird thing is, YouTube has this new thing for new streamers, for new accounts, that you are supposed to, once you create an account and if you want to live stream, you have to click a button and then it starts like a 24-hour clock that is like, oh, once this clock ends, then you can stream on that account, which is the weirdest thing, like the weirdest freaking thing. That you gotta wait 24 hours. I was like so in the mood today. I was like, I'm gonna do a live stream. I'm gonna invest, and but then that killed my mood. Then I'm like, okay, I gotta find an old account which I can like unlist the videos from, change its username, change its photo, and then unlist all the videos, make them private. But for some reason, I guess they didn't go private. So I'll take care of that in a second. This is the weirdest thing, but did it really not? What? That's crazy. Live? Oh, I see. Okay, so the live streams your channel. Oh, this is so weird. Oh wow, that's awkward. That's embarrassing. This is so embarrassing. Okay, so let me change that for a second. So look, analytics, dashboard, content. Oh, okay. I forgot to go on the live one and then make them private. Okay. Private. Wait, private, save, private, save. Wait, no, private, yeah, save. I went to the videos and made them private, but I just never went to the live streams and made them private. That's awkward. Weird. What kind of weird person plays Fortnite and then starts investing like 4 years later? And then starts making investing videos. That's like a 180 U-turn. But since that U-turn did occur, we can go back to our investing content. All right, buddy. Thanks for dropping by, though. All right. So let's do some deep dive into the stuff we were actually here for. So, our fiscal year ends January 31st. Okay, cool. Competitive strength. Before we do anything, actually, thank you. It's actually like a joke. I mean, if you look at the description down, I think it's there in the description. Like Mr. Market is like an analogy for the stock market created by Benjamin Graham's teacher, but not Warren Buffett's teacher, Benjamin Graham. But Buffett goes into more detail and says, Mr. Market is basically a drunkard man who is the embodiment of the stock market, who's basically like the day he's like super excited, he's gonna he's gonna increase the prices, and then the days he's like depressed, he's gonna like there's gonna be negative day in the stock market. So the purpose of this is we're not drunken Mr. Market, we're sober Mr. Market. So we analyze the market, but we're not emotionally attached or drunk to make stupid decisions like Mr. Market. So that's where the name comes from. As for the name of I think the stream is like One Up on Mr. Market. That comes up from a title of a book from by Peter Lynch. It was titled One Up on Wall Street, but we're not against Wall Street. We're against Mr. Market. So One Up on Mr. Market. So One Up on Mr. Market is the name of the stream. So this is going to be like every week or I don't know how many days it's going to be, but this is a test stream on this account and seeing how it goes. So I want to see the financials. So I want to see the most recent financials. What are their gross profit? What's their what are their margins? Actually, I can just do that here. Oh. Okay, this is not supposed to be. Oh shit. Well, there goes my school ID. I'll take care of that after the stream then, I guess. So Bath and Body Works. The benefit of streaming things that are not video games is that you don't need a supercomputer to make okay content. You just need, I don't know. But so far, these are quarters, right? Okay, so 5 years, yeah, so that's fine. Let's see. So they're in their income statement for their quarters. I need the most recent one. So their net sales is 1604, and their so their net sales is their revenue, and their gross profit is 678. So that's gonna come out to, let's give a basic thing, 678 over 1604. So they have pretty good gross margin sales. Yeah, I started so okay, I see what you're saying. I'm not trying to show off. That was just an accident because I have to sign in. But yes, I'm recording. So they have pretty good gross margin sales, about 44% gross margin, which is like that's a pretty good advantage. I want to see. Okay. Ooh, the good thing is I can use ChatGPT for this stuff. I can ask ChatGPT a question and then be like, give me more information on this company. Give me more information on its competitors. What does this company do, without me actually reading the annual report? But nah, this is like a diary for my investing. So like I can look back and see what my mindset was when I was actually going through this. Plus, I mean, it's YouTube. There's not gonna be people exposing bad. Okay, that's a good name. Hold up, that's a good name. Exposing Bath and Body Works. You got the name the other way around, but yeah. Exposing Bath and Body Works, yes. I actually need to get my my mic and my what was it? My mic and my webcam from home. Forgot those things, but I'll do that over the weekend, and we'll have better video and audio content next time. But so yeah, we were going through the report, right? Okay, so we start right here. Where is it at? Okay, so fiscal year, okay, competitive strengths. You're gonna be the next CoffeeZilla trust. I don't even know what that means, but thank you. I don't know who CoffeeZilla is. Dude, this is the MacBook Air mic. Not even joking. That's like the inbuilt mic for our laptop. It is good. Don't get me wrong, but that's like, I mean, I'm just telling you, that's like the inbuilt mic of a MacBook Air. Okay, industry leading product. Okay, so let's zoom in a bit to read it easily. Okay, an increase of 13%. Interesting. Okay. In-store experience. I mean, I'm a customer of Bath and Body Works. Like, I have a candle that's going off right now. Hold up. Let me show you this candle. So, I'm a customer of Bath and Body Works, and there's this candle from Bath and Body Works. So, I have an idea of what they do. They sell scented stuff in stores and I think decorating. I'm not sure about the decorative stuff. Like, they sell like sanitizers, they sell like candles, they sell I think like room fragrance, like those plugins, sprays. So that's basically their so that's their basic items. Let me just see through it though what they are actually. So bad in both works, damn me. Wait, what? Um, as a result of so our White Barn store design has increased in sales. Okay, approximately. Okay, so it's called a White Barn store design of our stores. White Barn store design. We expect to remodel 50% of our remaining core stores over the next 2 years. Interesting. Okay, we'll open new stores and emerging. Okay, so they're opening up new stuff. They're taking up real estate. Okay, so about 40 to 50 mall closures. So they're gonna open up. We're planning in 2022, consisting of new off mall stores and 50 remodels. So they're buying new 100 and they're expecting 50 to close. Interesting. Okay, so they're increasing their store count by 50 basically. Okay, franchise. Our partner biz model, pricing architecture, recognize. Okay. So their revenue is generally recognized in their wholesale and sourcing arrangements at the time title passes off to the partner. We continue to increase. Okay, that's interesting. Okay. Okay, so they primarily sell wholesale to their partners, and then they get their revenue as part of royalties. That is recognized at the sale of the merchandise. That is an interesting note. I'm gonna add that. So let's do a main. Let's do this main. Hold up. Let me change this name. Main. So this is BBWI. Price currently trading at, and then shares outstanding. So let's go with that actually. That shouldn't be too hard. Bath and Body Works. Okay, I can't even open that up because it's Mac. Okay, so this is gonna be Bath. How many? Okay, BBWI. So they're trading at $44.21, $44.21. So I'm just gonna write 44. And then their shares outstanding is going to be in their annual report, I think. It's like in the first page of the annual report, basically. That is wait, hold on. Let me just minimize it so it makes it easier for me to like navigate. Okay. Wait, I can just ask ChatGPT how many shares outstanding does BBWI have? What the hell? BBWI shares outstanding. Give me an answer. Give me an answer. Okay. Bath and Body Works. That's weird. So we're just gonna look into a 10K. I think it's like the first thing on the website on their 10K. So 10K is like what you call an annual report. Okay, they have 238,910 shares outstanding. Comes out to okay, I'm gonna close this. 210,938, I think, right? 210,910. What's this? So that brings their market cap up to equals this times this. So what the hell is this? What? That's not right. 20910,116. 238,910. Okay, 238,910. 116. That's even a bigger number. What the hell? Yeah, that's actually okay. In USD, that's basically in billions. Market cap in billions just comes out to equals this. I think I divided by like. Nope. A couple more zeros. Nope. One more zero. Okay, that's 10.5 billion. I'm gonna create this as a number. And then create this as dollars. Currency. And actually, I'm gonna make this currency as well. Okay, $10.5 billion, and that's just $44 per share. Okay, so BBWI, let's do some notes here. Revenue, and like cost of goods sold, or whatever they call it. COGS. Let's just write that down. COGS. All right, I have to go, but I'll leave. I'll leave your stream in the back. I appreciate it. Thank you. Cost of goods sold. That comes out to gross profit. Gross profit margin. Okay, we'll take care of that in a second. But revenue recognition model. That's interesting though. Revenue is recognized as wholesale sale to partner stores, plus additional revenue is recognized in the form of royalties at the what they say exactly? It's so the revenue recognition model was okay, they said something around yeah, there it is. Okay. Make investments. Revenues recognized per franchise consist of royalties earned, and royalties are earned and recognized upon the sale of merchandise. Royalties at the sale of merchandise. Okay, cool. I'm gonna actually make that. Okay. So their store count increase in 2019, increase in 2021. That's good. Okay, that means they're growing in that sense. Okay, merchandise vendors during 2021, we purchased from approximately 125 vendors, so they're pretty diversified in that sense. Approximately 12% of our The large, okay, 12% isn't too bad with our no single vendor and 10% of merchandising person. Our largest 5 vendors approximately supply, okay. So that means if that's 12%, that means the next 4 are supplying about 23%. I mean, that's fine. That's no big deal. It's a pretty big amount. That's a pretty big percentage. Okay. So that's not too bad. Distribution and merchandise. We'll get into this in a second. Let's go and look at the financials. Where are the financials at? Okay. Bath and Body Works is this one. Okay, so they have trailed the S&P and the S&P retail. I mean, that doesn't matter. That doesn't matter to us, at least. We can still buy it at a cheap price and then make money, more money than the S&P. We'll take care of it in a second. I just want to look at revenues and net sales and stuff. Consolidated. Where's that? I'm also interested in looking at their products. Where is this? Hold up. There it is. Okay, so this is their current assets and their net income, net sales. Okay, there it is. So we're gonna start off making what? Sheet 2. Let's do it this way. So how do I increase? Okay, so 21% of revenue. So this goes down 1, and then 2020, and then 2019. So we just copy this and copy this and copy this. We're gonna have to look more. We're gonna look at that in a second. So this is gonna be pretty important to us. We're gonna do this, and this. Let's go down 1 more actually. This, and this. So let's see what they got for us. So they did, yep, cost of goods sold. So that's 5405. Oh no, actually we're going 7882. Actually, I want to inverse this. So the oldest goes first, 2019. Okay, so that's cool. Oh, what the hell? Don't save. So 2019 revenue comes out to 5405. 6434 and 7882. Okay, that doesn't tell us much. We gotta look at more years and see how it did in downturns to get a better idea of their model, basically. Cost of goods sold is 3018. 3018. 3338. 4027. Gross profit is, okay, so that's just, so that comes out to that. We're gonna actually hold this out. And then that just comes out to, no wait. There we go. Then we just make this a percentage. Gross profit. Okay, so we're just gonna do this for these guys, and then this for these guys. Okay, so their profit margin increased in the past 3 years, and that's like by a significant amount. Okay, let's bolt this out, and then D5. So that just equals over D5. This is just for me to get a better idea of what I'm actually working with, like what are the percentages. Okay, so let's make this a percentage, and then copy this and then paste it right here. Cool. That just does it the same thing that I just did. Okay, I'm actually gonna move this ahead actually. Okay. So expenses comes, so, okay. So I'm gonna see year over year changes in revenue. I'm gonna move this down. Okay, year over year change. Get more for 2019 in a second, but as for this over this, all minus one. Okay. Or minus one. I think it's like minus one. That comes out to percentage. That's a 19% growth. Oh my god, 22% growth. I want to see how they're doing in the current year so we can get a better idea of their, what's their current growth rate. I want to look at that current margins. So let's do 22 Q1, 22 Q2, 22 Q3, and 22 Q4. Gonna increase this for a second. What the hell? I need some Coke. Hey, Coca-Cola, not the other one. Not the other white sugar. Okay. So that comes up to the gross profit margin. Gross margin, not gross profit margin. Gross margin. Okay, so that's gross margin. Now we're looking at the primary expenses. Let's do expenses as this. Okay, so expenses come out to. Wait, how updated is this? I want to compare it with this. Annuals, refresh. How much did they do it? So, is this the same BBWI Bath and Body Works? Yeah. Okay. 13. Yeah, these numbers are somewhat. What the hell? What? Huh? Okay, standardized. I don't even know how they got these numbers. These numbers are just way off. I mean, at least from their 10Ks, these numbers are way off. So we're going to stick with the 10Ks rather than emergent. Okay, so expenses include the G, A, N. Okay, general GMA. Wait, is it general? What is it? General G. Hold up, I gotta look at what I did earlier. This is so dumb. Been recent. I'm gonna look at HPQ, which I was working on just yesterday. There, I did SG&A. There we go. So there, SG&A. So the thing is that I'm not going to take all these expenses. I'm only going to look at the ones that are consistent. Like, I don't know what these other losses include, so I'm going to have to look at that. Okay. So their main expenses as SG&A. That's crazy. So they don't have to do R&D. That's amazing, actually. So let's do it. So 1,357 was it? Nope, that's so off. Nope, 1,347. There we go. So 1,347. Then we do 1,492. Then we do 2021. Comes out to 1,846. That's pretty different than from the previous years. That's a pretty big increase. So I want to see what's that about. What the frick? Okay. Over D5. So I'm just gonna copy this, paste that, and paste that. So that's 23% of revenue. Damn, that's crazy. I'm gonna put that in percentage form and then see what's up. So that's 20. Oh wow, actually, when you actually compare these two numbers, that's insane. Whew. This actually went down rather than, from 2019, this went down relative to their margin. Okay, that's interesting. So this is total expenses the same as this G&A, because that's all their total main expense. Oh, actually, I'm going to increase this expense in here as well. So that comes out to 388. What is it? 388. 432. There it is. Oh no, I messed it up. Shoot. 388 is right here, and then we have 432 and then 370. That's what I'm talking about. Like this is what makes it confusing a bit. I mean, that's a joke, but this is not why it's confusing. So, look at total expenses. Equals sum of. Actually, no. I'm gonna do this over, and then turn it into percentage, and then copy this. Interesting. Okay, so the total percentage expenses decreased over time, which is interesting. That's a very good thing. So their net income comes out to net income. Oh, so operating income. No, wait, is it? Income from. Okay, so that's not going to be considered under, but I'm going to consider that. So I'm going to take that as income. Comes out to equals, because that's like somewhat consistent. So gross profit minus this, which equals out to that. Damn, that's a huge jump. Wow. Wait, that's not right. Okay, they lost. Yeah, I'm not including other loss because like that's not something I can predict in the future. At least not without reading the management discussion. Okay, that's interesting. So what other things do they have here for us? I'm gonna go through this, just skim through it for a second. Not even skim, just scroll through it to see if they give us like different products. Okay, so that's million leases. Total lease payments, 1.3 billion. So, okay. Okay, interesting. Okay. That. Okay. So let me look at what I did with my HPQ analysis, because I'm still trying to remember what I'm doing for my previous analysis. So I just like looking at it and seeing what I did to get a better idea of what I can continue with. Total revenue, cost of revenue, expenses, which don't actually matter that much in the long term. I mean, they do matter, but if I'm just looking at operating income and seeing how that might differ from, how might that relate to the gross profit margin? Because I'm basically looking at as a percent of gross, I'm looking at cash flow from operations as relative to gross profit margin and relative to revenue. which, let me show you this. Hold up. Because the thing with relative to when I'm looking at relative to gross profit margin, and that gross profit margin is increasing because of the competitive advantage of that given company, then that means my cash from my cash generated from operations also increases. So let me show you HPQ. This is what I've been working for the past 2 days. Whew. Okay, so I didn't really care that much about expenses, but what I did care about is this line, my cash from operations line. And then I take care of the depreciation and all that, and then I get free cash flow. I didn't do this because I found out that they have a line, although it's not stated as free cash flow. It's like adjusted cash from operations or something. So I just took that, which was adjusted for depreciation, amortization, and change in capital expenditures. So I just took that line instead. And then, which was kind of similar to this, but I had some other things that I was doing, but that they were doing their free cash flow line. So I just took it, did some analysis of how it changed over time. This free cash flow is all over the place. This is HPQ, Hewlett Packard. But what was consistent was that relative to revenue, that thing was consistent. And what else was consistent? Okay, something happened in like 2015 that changed their margins completely. Hold on, where is it? Yeah, that changed their margins completely. So I think they did a sale, or like they sold part of their business. I don't remember. I didn't see what it was. That's something I should look into. But what something I saw was after that time period, their margins were between 35 to 40, like 45. That's where their range was. So I did that over here. Free cash flow as a percent of revenue stayed between 6 to 7, which is kind of consistent with their current strategy, 6 to 7. That's like on the lower side as well. Because expected in the future, at least in 2023 and 2024 and 2025 and part of 2025, I expect for the recession. So I gave them a lower free cash flow as percent of revenue. What they did say was that their implied shareholder return is supposed to be 100% through dividends and through buybacks, which is insane. So I did an analysis of dividend per share, how might that change over time, and their shares outstanding, and their dividend yield and all that. So I'm gonna look at this and see that I just need basically the free cash flow line. That's all I need. So free cash flow is gonna be somewhere in the report. That's what we gotta look for. Free cash flow. So we gotta look at cash from operations and how that's getting divided up. Okay, so from cash from operations, we're gonna look at what? So 2021, last year. Last year's report. Okay, so they've been buying back shares, which is good. Damn, they've been buying back their share at $66. And they were buying this at last year though. Right now it's like 44. Damn, they overpaid for it. They were almost buying at the peak. What the hell were they doing? What is this? Bro, they lost almost 63%. I mean, that's not true, but to some sense, that's not true. What the hell? I mean, they could have been buying right here. They could have been buying not at the very bottom, but they should have started buying at a lower price. I mean, they were hitting an all-time high basically. I mean, they should have done. I don't know what their value comes out to, but I want to see what it comes out to. So we get assets. We're gonna look into that in a second. I want to see how much. No acquisitions, which is good in recent years. Shit, this is increasing. I mean, this increased this year. Trade names stayed the same. What the hell happened here? I want to see the cash from operations. Whoa. Their cash just dipped. What? That's crazy. I want to see what their total liabilities are. Ooh. Total equity is negative. How much debt do they have? Okay. Oh, accumulated deficit. That's the other reason. Okay. That's their main reason. They have accumulated deficit of income debt. And why is that, may I see? I want to see cash flows. Okay. So 2021 it was 739, 2022 it was 366 for net income. So then we got, hold up. That is not something we agree on. It says you got 1618. Whoa. Where is that coming from? Woo. Okay. What? How are they? Wait. Oh, no wonder. I'm looking at the 10Qs. I need to look at the 10K. I was like, what are these numbers? They don't make sense. Okay, so let's just go up and see where it says cash from. So I want to see change in cash in general. Let's go to the balance sheet. There it is. So that's the operating activities, and we're going to see the balance sheet right here. Okay, so, okay, that was still a big decrease. I don't know why that was. How much are they in deficit, though? Because of retained earnings. Okay. So from their net income, they generate, okay. Those are a big hike. What they pay less of. That's almost $500. I mean, $500 million. Yeah, that's almost $500 million. Where did they pay? Why did they pay more? I mean, why did they pay less of that here? So that's 254 of Victoria's Secret asset impairment charges, which is interesting. I want to see what kind of stuff they do. I mean, if they're Victoria's Secret stuff, this is interesting. So they gain about depreciation on long-lived assets here. Okay, so they had an increase in depreciation. They had an increase in impairment charges, which is like a one-time thing, I'm assuming. Well, maybe 2019 was interesting too. Got to look into farther back. An increase here relative to this year and this year. What is this? Accounts payable. Okay. And then an increase of other assets and liabilities. That's interesting. We got to look farther back and see what's happening here. So we're going to write 2019, 1236. So this is their net cash provided by operating activities. So that's like not cash from operations. No. Yeah, so that's basically their free cash flow. Cash from operations, which are includes in depreciation. Okay, let's use this as their free cash flow. So we do 1236. So free cash flow, do 1236, I think, right? 1236, and then 2039. No, that's not right. 2039, yeah. So 2039. Oh, nope, not the right number. And then we look at 1492. So, as a percentage of revenue over D5, how much is we looking? How much are we looking at? 22% of. Ooh, that's actually a good margin. Whoa, that's good. Zoom in. Yeah, I'm assuming that's like a fluke year. Yeah, 2021, after that money was printed into the economy, 2021 was definitely a fluke year for these companies. Oh, hello. What's up? I'm doing pretty good. I don't know how long you've been here. Because I just saw that. Oh, hello. So excited. Hello, KJ. What's up? How you doing, man? Thanks for dropping by. How you doing, man? How you doing? How's life? How is it that you and Only Ghost dropped in at the same time? This is like planning. Okay, so compared to what I was doing with HPQ, so right now, just a heads up, I am looking at the financials of Bath and Body Works. While I'm basically like making my own sheet and looking at how their expenses vary and how their cash flow varies from year to year. And I'm making that, you know, what you mean? Run. What does that mean? I don't know what that means. Help me, help. I know who KJ45 is. I know who he is. I played like video games with him. But so we did free cash flow. We changed year over year. Free cash was a percent of revenue. Free cash flow relative to gross margin. So let's do that as well. So free cash flow percent of growth year over year. Free cash flow percent of rev, percent of GM. That is equals. Okay, so that's minus over -1. That. Ooh, hiccups. Whoa. That copy's there, so we're gonna just do. Nope, not that percentage. That percentage gives us more detail. We don't have enough data for like 2018, so we're gonna get back to that in a second. So free cash flow is a percent of revenue, so that means equals this over D5, I think. So yeah, that's a percentage. So that, I'm just gonna copy this exact thing and then paste it here. Okay, that's not okay. So they're about 20% of revenue is their free cash flow. I want to see what their percent of gross margin is though. Gross margin is D8. Okay, equals over D8, which is 50%. That's interesting. That's interesting. I want to see if that is continued. Yep, that was a fluke year. So yeah, that basically like averages out. These 2 years basically average out. So yeah, that was pretty consistent then, I guess. But we can expect a lower free cash flow in the upcoming years. I want to see if they did like slideshows and stuff to see what they're expecting in the upcoming months. Our company investors. There we go. Financial information. Yes, events and presentations. And yep, that's what I'm looking. I may have an annual report. Annual reports are just too much stuff in there that I don't need. I want to see what guidance. I'm gonna get back to quarterly upcoming, but I want to see what's up. Okay, actually, let's move to quarterly guidance. Or, I mean, not quarterly guidance, but in the upcoming quarters, see what's up. Then we'll move back a couple of years and see how that trend relates to the past couple of years of revenue and free cash flow. Oh man, it's 9:47. I've been streaming for what, 51 minutes now. That's crazy. I'm not even tired. Okay, I'm gonna remove this because we don't know that yet. So let's do revenue. So revenue came out to, what's this? Hold up. So that's 10K. And then this is Q1. Yeah. So first quarter they got 1450, and then 781, 1450 and 781. 781. And then that means minus this over that, and that means this over that. We get 46%. Pretty consistent. Not bad. Percentage. Okay. So we cannot exactly use year to year, but we can in a second. I'll take care of that in a second. Okay. So we'll take care of that in a second. Then revenue. For Q2 came out to 1704 and 876. 1704 and whoa. That's an interesting number change. Okay, wait, no. Equals minus this, which is over that. Okay, pretty good gross margins here as well. And finally Q3. This is staying pretty consistent. I don't like that. Even up. Okay, 1604 and then 6. Oh, I see why that increase might occur. That increase most likely occurred because of the what month did this end? October. So actually, I don't know. I want to see when did this end? July. Yeah, I have no idea. Being the summer, people are like, oh, you know what? I need candles in the summer. I don't know. We're gonna have to look into all that stuff in a second. So I'm actually gonna move this like to, so we can create a new thing here. So that's actually one more, should be fine. Let's maybe create, oh shit. So that's fine. Revenue. I'm just gonna copy this. Hold up. Copy this. But I'm gonna do it for a quarter instead. Q change. Q. Quarter or quarter change. I'm gonna make that so it's easy to read. Okay. For 2023, the numbers we have are 1604. I'm assuming that in Q4 usually they have an increase in revenue because of the holiday season. So I'm going to look at 2021's Q4 and see relative to like other months how that relates. Other quarters how that relates. So cost of goods sold come out to 678. Dang, that's an increase in margin. That's a good increase in margin. Minus equals. That's crazy. Whoa, that's actually pretty good stuff. We don't even have to try. It's always a good time. I'm not even actually playing any music right now. Which comes out to P. Okay, I mean, that's fine. I mean, this stuff doesn't actually even matter. But I'll just keep it just so I can consistent with the year-over-year stuff. Interesting. I want to see if they gave guidance. That's what I was looking for. Q4 guidance. Yep, presentations. I'm gonna commentary, and I'm gonna add that as well. So this is the presentation for Q3. That doesn't matter. Forward-looking statement. Nope. Okay. Basically what we just saw. Okay, so tax rate about 25%, 24%. Gross margin rate, fourth quarter was oh, that's interesting. Not what I see here. Whoa, that's definitely wrong. Something wrong here. 6 That make no sense though. What? Oh. No way. Hold up. I'm gonna take care of that in a second. Wait, what? That's 926. Oh, I did the other way around. That sucks. Okay, and then for Q2, just double check. We got 958. What? Oh my god, I did 2021. I'm so dumb. 16, 18. And 958. That makes a lot more sense. Ooh, this is not good. This is going down. Yes, I just sang Justin Bieber. But okay, so let's see what they were saying in their presentation. Okay. That's a decrease in gross margin, which is not good. Okay. So, their free cash flow so far for the year has been around $475 to $550 million, which is like what, 5% of revenue of like market cap. Because like the market cap's like what, 10 billion, then 500 million over 10 billion. Actually, no, wait, so dumb. So if we're looking at 500 over 10,000, yeah, it's like 5%. That is 5%, not like 5%. Okay, that's not. I mean, that's. I don't know. We're gonna have to see a DCF to get a better idea. Okay, so they basically gave us depreciation. Okay. The amounts above are only reflected long-lived assets that remain with Bath and Body Works following the Victoria's Secret spinoff. I, huh? They did a spinoff of Victoria's Secret. I'm not aware of that. When did they do this? When did the? I'm gonna ask ChatGPT. When did Bath and Body Works do a spinoff with Victoria's Secret? Oh, that is interesting. Oh, okay. Fascinating. I was not aware of this. Um, okay, so that makes sense. That makes a lot more sense. So Bath and Body Works, I mean, okay. If we look at, so they said we're expected total cash of what, 500 million? Total, that's free cash flow, right? 500 million of free cash flow is what they said. So that's 500 million. Let's assume 500 million. So what are we looking at in the Excel? What the hell? Yep, their net income's taking a big hit. So we're looking at free cash flow of 66 for Q1. I want to see this with comparison to, hold up. So 249, yeah, that makes sense if they're getting something like 249 plus 570, that's like 8 plus. Yeah, that makes sense that they're getting to a number around 14, almost $1,500, $1.5 billion. But that's a huge freaking drop. If they're expecting only $500 million in free cash flow, damn, that's crazy. Damn, that's crazy. So 66. We're gonna do 81. 67. And this is basically because of net income. And net income's primarily low because of the net sales is also basically the same. What's the big drop? So their cost of goods sold is increasing. Um, yeah, that's like 150. That's $150 million increase in cost of goods sold. Damn. Their SG&A increased. That basically brought the net income down like $200 million. Did they sell this at a lower margin? What quarter is this? This is Q3, right? Yeah, I mean, their Q3 margins relative to. Yeah, they were down. Yeah, their cost of goods sold just went up. I'm assuming inflation is the reason. Because I think their candles were around the same price. Like, I think it's like three for $15 or something. Or like 3 wick candles with something $15. They always do this deal. Um, so inflation came, their cost of goods went up, but their prices did not relatively go up. Okay. So, what is this? Percent of revenue. And that's like percentage. I'm going to copy this, paste that, and over, what was this, gross profit? Man, that's brutal. That is freaking brutal. But that doesn't make sense. That still does not explain. Wait, the margins dropped by 2%. Maybe 3 to 5%. Their margins dropped by 3 to 5%. But their free cash flow margin, free cash flow relative to gross margin decreased by 40, 30%, 40, 50%. That is dumb. That doesn't make sense. That just does not make sense. All right. Let's just times it. It's 1016. Okay. Let's look through this again. So their SG&A stayed relatively the same, which makes somewhat sense. Um, but it's like increased by 50%. Oh, not 50%, 50 million. Which brought the total difference between operating incomes down to about 200 million. And then interest expense stayed relatively flat. They didn't have other weird losses from the year prior, so they gained almost $91 from the previous year relative to the previous year. So that would have offset almost $100, $100 million less taxes. So the net income, they're basically giving out, how much is that in dividends? 0.4 times. I'm gonna see how much that is in dividends. It's like what, 238 million. Almost 0.4 times that much money. They gave out more money in dividends than what they made in that quarter. 1.57. Although that doesn't make sense though. Yeah, actually that's fine. 1.57. It's 375. Yeah, they are giving out more money in dividends. That dividend is not sustainable relative to their I want to see retained earnings statement. Where is that? Didn't give a retained earnings statement. Okay, there it is. So if the okay, that's primarily because of treasury, and then the balance from the previous month. Oh man, this is crazy. So 0.62 per share average. That means net income minus dividends and share buybacks is 1.2 billion. So 1.2 billion dollars in share buybacks and 140 million in dividends. Even though they spent more money on, oh wait, they spent almost, I mean less, but almost, what? Their dividends doubled over the course of 1 year. What the hell is that? And they lost money. I mean, relative to the previous year. They went, okay, so their income went half and they doubled their dividends. Yeah, that's called smart business running. It's called smart management. Yep. The management does not seem competent in what they're doing, but who am I to judge, right? So I don't even want to do a DCF for this one, man. Okay. This is $214, and they're expecting almost $280 million in just one quarter. I mean, that's okay. Okay, I mean, if they're waiting for their season end like quarter, then maybe that could work. Okay, so let's do a DC. Let's look at previous years. Actually, I'm gonna look at 2019's and I'm gonna look at 2018's annual report and seeing what their numbers came out to be. Okay. It's like, wait, hold up. Okay, so we do 2018, 2018, 2017, 2016. How long have they been? Wait, have they been on even on the market for that long? Yeah, they've been in the market for like since like prior to it all going digital. How big was this? That was 38%, and this is 80, and that's like 90%. What the hell? This is considered big. This was 71%. That was this drop was bigger than this whole drop. What? No, I mean this was still. I mean this was COVID. I mean this was like 2019 effect. Oh no, this is 2008. What the hell? This is a 208 drop. This is recession. I want to see this data. Oof. I mean, yeah, you could assume that consumers were not buying candles during a recession to, because they got to feed kids. But this is COVID. What? Look at this run. This minuscule drop of 60% relative to this friggin' boom of 800%. Bro, what? This is an anomaly. This stuff that should not exist on this scale. Wow. This is crazy. Okay. So let's do DCF. From 2016, 2018. Okay. Do the frig me. Okay. So we're gonna bring everything back to where it was. Control X. Oh no, actually we can just move this by hand actually. Okay. So let's do 20 what? Ooh, I do want to see this where they got this stuff. But as for as for 10Ks, our company, investors, financial information, SEC filings, animals, 18? No, 2019. Just the this is what we're looking for. Oh, so they were going by L Brands Inc. Interesting. Yeah, so this is going to be very different compared to what we're about to see. So they were outperforming the market, and then It's gonna be difficult to go through, just because how different this company is, or was, back in the day. So we gotta we gotta attempt to isolate. Wait, is Victoria's Secret on the stock market? I'm assuming not. Wow, they're on the stock market. Was not expecting that. So these are the ones that got formed rather than, this is the company that got formed rather than, Bath and Body Works has always been there. Fascinating. Okay. So this is the one we don't have enough data for. Okay, so they actually, no wait, that's, did they divide this in cells and show us how this actually forms? Okay, there we go. We get 418 for 20. Okay, so 2016 is 3852. So that's 3852, and that 2017 we get 4148. We don't have anything for 2018. Okay, can I see something more detail? Okay. Can I see like numbers? Okay, that's their operating income. I want to see. So we can assume 39.3%. They did better without a Victoria's Secret on them. Okay. Oh, what was BB Bath and Body Works? What was the gross profit Bath and Body Works segment in 20? Bro, this ain't helping me. Come on. One day I actually need you. Don't help. Okay. This is so dumb. So basically, Victoria's Secret was bringing down Bath and Body Works. Okay. We gotta make guesses that most likely don't even exist at this point. So we're gonna. So the total gross margin was about 40%. And we saw operating margin of Victoria's Secret at like 18-19%. It's so difficult to separate these two segments out of the business. I'm going to have to assume this profit margin about 46% on average. Let's do 46%. 46% equals times Okay, so we can assume things that this is going to be a bit difficult just because I'm not used to anything like this. Okay. Considering how Bath and Body Works is growing year over year in stores, like they're opening up 15 new stores, we can still see that growth, but with their current growth, I'm assuming this is because of the recession, sorry, because of the inflation, but they need to get this under control because this is not sustainable. Their current margins, bro, their margins were insane and they just got dumped on, quite literally got dumped on. The hell? Yeah. So, considering their previous margins that they'll try to go to that, I'm gonna basically discard this year as the next 2 years. Actually, I will discard the next 2 years as fluke years. So we're gonna do actually right here. We're gonna do actual, current, estimate, and then V0. It comes out to 1. I found this on the web. What the hell, Siri? 5. And then we're gonna do revenue, revenue growth, art growth, free cash flow. Oh wait, no, free cash flow percent of rev, free cash flow percent of GM. Of GM. Okay. Double check this with. What the hell just happened? So we're gonna do a discount rate of almost 1.09. So we're gonna write that right here, discount rate. Something for us to play with. So perpetual G, and then market return. Actually, I'm just gonna copy that from my previous one. Hold up. It's right here. I'm gonna copy and paste this basically. Actually, I'll just write this by hand, but oh yeah, I need a GM as well. Okay, I'm gonna bring this down right here. Move all of this up once. So this is important to me. This is important to me. That is important to me. Present value. Value of FCF. Present value of free cash flow. Shares out. I'm going to do a shares outstanding calculation. I don't know. I'm going to keep their shares consistent because I don't know what's happening to their company yet. All right. Okay. Perpetual growth, free cash flow per year 5. Free cash flow year 5. Hold up. Terminal value. Do some line right here. Okay, so let's get revenue from, what's this gonna be, like 19, 20, 21, no wait, 20, 21, 22, 4, no wait, that stays the same. Why not 27, 27. Discount rate starts right here, equals to the power, to the power of this number, equals this to the power of that number, equals. This is reasoning for this is primarily so that if I change the discount rate, if I want to play around with the discount rate for my rate of return, I just have to change that one number, and I can get a, an adjusted free cash flow value for my rate of return. Okay. So now we copy paste some stuff. We get 6434, 6434, 7882, 7882. And we're seeing almost, let's assume 17 or 18. Wait, no, usually, yeah. I want to compare it with the Q4 last year. Quarterly filings. I want to see 2021 Q4. Oh shit. It is their Q. This is their Q4. This is their fourth quarter. Damn, this shit is doubled. Whew. I want to see this with like 2021. This is usually like a huge difference. Oh, that doesn't matter. Let's look at 2018, for example. Adobe. Even 2020. Well, what can you do about it, right? So, I'm gonna take it from last year and assume, because I mean, I saw a lot of people in these stores, but I don't know what to compare that number to. So let's assume about 2,500 maybe. So we sum this equals sum this plus, let's go with 3,000. Okay, so equals over this. So we do that -1. Cool. I'm not even listening to music. I'm just humming that to myself. I'm gonna assume this to be -20%. Actually, no. I'm gonna assume this to be at -20%. Gross margin for 2020 was, whew, what's our gross margin at? So this was 3096, 3885. Oh my god, this is like horrible. So I'm gonna assume about 10%. So 10% equals times 0.1. Wait, no, this is more than what they said they would make. This has to be about like 500 million. So 500 million, that means if equals divided by 0.1. There we go. That we got a revenue for 2025, 2022. That made it. Oh, my bad. Well, why would I reach chat? There's usually no one in there. So we're Mr. Market. Yeah, what's up, bro? What's up, bro? What's up? Holy shoot. This is gonna include like a lot of macroeconomic guesses because of the cyclicality, not the cyclicality, but the consumer discretionary behavior of Bath and Body Works' products. What's up, Ghosty? Yeah, I'm almost done. You wanna do something? Progress is pretty good. I'm almost about to come and estimate. The intrinsic value. AP macro, like you're taking the test or like a homework assignment? I took AP macro my senior year of high school, and that's what was like, I should do economics as my major in college. AP macro did that for me. Let's do another -10. Oh, I see what you're saying. I'm going to assume about 20% growth and then let it flat down to 8%. Really? Bro, I actually really like macroeconomics. That's why, it might actually be something to do with my master's in economics. Okay, so let's do, I'm going to. All right, good night. Oh, you have school tomorrow. I totally forgot. Bye-bye. How do I... Good night. Okay, so this is going to be... Okay, so equals times 1 plus Bye-bye. Bye-bye. This is gonna be more than like, this is gonna be like 15%, and then we come out to like 10%, and then we do 2.5%. So this equals out to this, and then we get terminal value of oh shoot, this is only the revenue. This is not even. Okay, so I'm gonna have to. GM percent gross margin. Let's continue this about let's do 10%, and then we continue this with better, I guess, 13%. Yeah, I'm gonna give that to inflation, but I think they do they plan on increasing their prices? I'm gonna just Google this. Does Bath and Body Works I want to see how inflation has affected them. Yeah, that was a good guess though. And the operating rate decreased from D2 and continue. I want to see in their most recent. Where's that presentation? There it is. Said it once. Where? I don't see where it said it. This ain't good. I'm assuming like any good business is they should increase prices, but then that puts them That might put them at a disadvantage for their competitors. Because from my experience, we go to Bath and Body Works not only because they have good smells, they have amazing smells and scents. Um, they have great prices. $15 for like 2 or 3 candles. Ooh, it's a steal. I think it's like three 3-wick candles are like $15, or 2 3-wick candles are $15. Um, that's a good sale. It's a good price. What would they increase that to? If they were to increase it to, let's say, if they were to increase their margins back up. Okay, if they're selling their candle for $15, that implies that they're getting this candle manufactured at times 0.6. No, wait, it's 15 times point. Let's assume so 7.5 to make the candle 7.5 to sell like the set of candles. And if the costs now are like 15 times 0.9, that's an increase of 15. That's an increase of 90% in Whew. Wait, no, time divided by 2. It's a 90% increase. 13.5. They want their margins back. They're not going to increase their candle prices to $27. What they might increase it to is like $20 or something. Let's see how much $20 is like compared over 13.5. So it's like 13.5 minus 20 over 13.5. Wait, no. So if the candle is getting made for $20, okay. Oh no, for $13.5 today. The set, or okay, let's look at one candle. Let's assume it's $15. One candle is getting sold at $13.5. Oh no, it's being made for $13.5 and it's getting sold at $15 because of inflation. If they were to increase the price to $20, it's $20 over 13.5 is 48. They're going to increase their prices from $15 to $20. That's what they're going to do. That is reasonable. Wait, no, is it? Their margins are going to be 32% year over year. They're either going to bring their costs down, which are going to, their gross, okay, if there's deflation, their margins come back up. If there's more inflation, that's just worse for them. Yeah, I don't like it so far, so I don't think it's going to be undervalued at all. Let's keep this at 20%. Then do 30%, and then keep it at 32%. Okay. So that comes out to equals times that. Okay. So as for free cash flow, that comes out to, wait, no, for the, so 1236 for 2019. 2020 is 2039, 1492. Wait, that's not right. Ooh. This was meant to be free cash flow. Okay, let's just see. Equals. That's wrong. That doesn't help. We're gonna assume this is 500 then. This is 500. This is gonna be 0.15. So this is 500. This is what's gonna include the equals. That means equals. Gonna be like 0.05 then. Gross profit has already been like what, 12, 13, 13, oh wait no, 12, 13, 12, 13, 14, 1.4 million, 1.4 billion dollars. So it's gonna be 1,400. And if that's gonna be equals times, no, they've already done 1,400. Oh, no, wait, what? That doesn't make sense. Gross profit is 13, 13, 17. It's going to be like 21. Let's assume 22. They're 2,200. This is going to be equals over 0.1. That's the number actually works. Okay. Okay, these are just guesses. I don't know where I'm getting. I'm not pulling them out of my ass, but like we can assume that gross margin or like free cash flow at percent of revenue is going to go down year over year for the next at least 2 years, and then break even the third year. I'm assuming because of the recession that's coming. So down, down, and then up, 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 and then yeah. So I think I'm gonna stick with that. I'm gonna go equals times 15. Give me an answer. Give me an answer. Okay. So free cash flow for year 5 is like 1.6 billion. Terminal value equals this value, and sum of all these values is the oh wait, this doesn't matter right now. Present value of free cash flow. So we do this divided by this. We do this for all of them. And then we do okay. Then we find the sum of this stuff. This is what matters. Equals sum shares up. Okay, so we found an intrinsic value of okay. So this is the value that we got, and we get shares out. I'm just going to do average shares outstanding. Current shares outstanding. I don't know about the future. So currently we have 238,000 shares outstanding. So I'm just going to do 238. Million 2. I just want to see if my math is usually like kind of weird with this stuff. Yeah, it's gonna be pretty off. There we go. Intrinsic value. Copy paste this right here. %, MOS equals times 0.5. So, okay, this is unexpected. So we get an intrinsically cheap what you call it Bath and Body Works. So an intrinsically cheap Bath and what's it trading at? 44, and I'm saying 38. This is not considering dividends or share buybacks. I don't look much at the balance sheet yet because I'm still learning on how. I mean, I know how to read the balance sheet. I just don't know how to decode that into financial information, into like qualitative information. The numbers here are kind of funky because I mean, free cash flow as a percent of gross margin is just all over the place. I can't exactly pinpoint, but I can. It's easier for me to pinpoint free cash flow as a percent of revenue because I can estimate what revenue growth might be. Free cash flow as a percent of revenue. I can. It's easy for me to pinpoint. I'm gonna. Okay, and then this line, and then free cash flow line. So these are the lines that actually matter. Okay. I mean, what you call it? It's Bath and Body Works with these estimates is cheap. But these numbers might as well be pulled out of my butt. I'm estimating this. So I'm basically trying to see what the economy might do. Powell yesterday or the day before came out and said inflation is still increasing, therefore we expect interest rates to be up for basically saying interest rates are not working. And the current consensus of interest rates is to stay up until December of 2023 and then maybe come down in the last meeting. But since he said that yesterday, that means the current rate of interest is not working. We can expect them to last longer, the interest rate rising. That implies that the recession might last longer. Which in turn, is it possible for me to see a 50% drop in 2024? Let's do 30%, then 20%. Okay, that ain't that bad. $30? Okay, that's a price that I am okay with. That's a price that I'm willing to think that okay, that's cheap stock. And if I were to increase this to one, and that's $27. If I want an 11% minimum at $55, 11% with these numbers, I expect an 11% growth at $55. If I were to buy the share today, it's $55. And if these estimates are 100% true, I will get 11% of my money. But because I don't want 11% of my money, nor am I sure that these estimates are anywhere close to what the actual numbers might be, I'm going with a 50% margin of safety like I always do. So my current buy price, my buy price for Bath and Body Works comes out to $27.73. So this will enter my bullpen at $27. That doesn't mean I buy the stock at $27. Keep in mind, I'm not saying that you should buy anything at any price. I am just saying that if you think these estimates make sense somewhat, do not buy the stock. I'm saying do not buy the stock. I don't like the stock. These estimates are bad. I'm not saying that any estimates I make for any other stock is reasonable, but I'm just saying do not buy these stocks. I mean, I'm not saying do not buy stocks. I'm just saying in general, this is not buying advice. And I do not want to buy the stock. I mean, it's not that I don't want to buy the stock. I just have to do more research. Well, yeah, $27 is what I come to at with a 50% margin of safety.